Hey, it's Mike Lynch at AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of November the 5th. Hope everybody had a fantastic wet and snowy weekend. Ski resorts opening up soon. Can't wait to get on the slopes. And Niners won this weekend. Raiders won this weekend. So great weekend for the North State football. Let's talk about what happened last week, and let's talk about what's going to happen this week. So last week, we actually had a 68 basis point improvement in the bond market. If you watch my Monday morning videos, you know that when we have money flowing into the bond market, especially 68 basis points, that's an improvement to interest rates. And we've seen this improvement really in the last 25 days. In fact, before the last Fed meeting, average rate was a little over 7%. Now the average rate is in the low 6%. I mean, we've seen almost a 1 percentage point increase in mortgage rates in 25 days. Now, this isn't going to continue at this pace. A lot of this happened because we started to see improvements or an easing of inflation. So when I say an improvement, meaning it's not going up as fast. It's still going up. It's still at a 40-year high. It's just starting to wane, starting to abate. And that's because what the Fed's doing and raising all these Fed funds rate is starting to have an impact on the economy. And we're starting to see that inflation curb. And as we see inflation curb, money will flow into the bond market more. And that means that mortgage rates will get better. We also had big jobs report last week, and it was very misleading. So when we get jobs numbers, we get them from two basic entities, a lot of different ones, but the two biggest ones we pay attention to are the BLS and the household survey. And the BLS, which is the one that's used by the administration, is really misleading. It showed 263,000 jobs added in the last month, but they use a modeling formula. They try to estimate and guesstimate, where the household survey is actual surveys of employers and people in our society saying, hey, where are you with your jobs? And that showed 138,000 it decreased. So the BLS showed increase in jobs. The household survey showed a decrease in jobs. Huge difference here. And what people are starting to realize is that household survey is the more accurate one. It's actually showing that we're actually retracting as far as jobs. And, that kind of falls in line with a recession, and a recession is coming. So we'll see if this trend continues. So what are we looking at this week? Three things: inflation, we're looking at manufacturing, and then central banks around the world. So inflation, this is, the number one most of the time and what's really driving our rates. Last week, we had the PCE, Producers Consumption Index, showed inflation was going up, but not at a high enough rate or at the rate that it's been going up. So it's starting to curb. This week, we're going to see the PPI, which is the Producers Price Index. We expect that to start to wane. And then next week is CPI, Consumers Price Index. So 3 weeks of 3 inflationary reports. And if the trend is continuing, we're going to see inflation starting to curb, and that means interest rates are going to start getting better. So we're going to be paying a lot of attention to this report this week to see if the trend is on track. If we see the weakening number or inflation starting to abate, then we should expect an increase or a decrease in mortgage rates. Manufacturing is the second thing. What are businesses making? Are they making more stuff? Are they pulling back? We had lousy manufacturing numbers last week, showed that there's a retraction. And so what are we going to look at this week? If that continues, again, it could be an improvement for rates, but we've got some retail numbers coming out as well, and those might show improvement just because it is the season for retail. And then the last thing is central banks. We got some central banks around the world. We're a global economy. Australia, Canada, what are they going to do with their interest rate decisions? Are they going to follow suit and raise like they have been? So we pay a lot of attention to what's happening in other countries because other countries, other investors put their money in our bond market, and that's what affects mortgage rates. So if they think that the economies are shrinking, then they might park their money in our bond market, which is the best bond market in the world for people to invest in, because when they put money in the bond market, that's safer money, right? Lower rate of return, but safer money. And if there's fluctuations or fear or concern about other stock markets, then money will float into that safer bond market. So this week, we're actually expecting rates probably to get higher today. Very volatile week, but we might see towards the end of the week rates improve, but very volatile. So we're starting the week locking. and there's going to have to be some big changes to move us to a floating position. If you know somebody can benefit from this video, please forward it to them. Have a fantastic, productive week, and I'll talk to you next week. Bye-bye.